Greetings, market rebels. Welcome to this week's macro measure video. It is Friday, July 12th, 2024. It's a little bit after 2:30 p.m. here on the East Coast, so the market has yet to close. And there's our sector situation graphic as well. If you'd have a look at that, because we're combining both videos yet again. And this is our trusty disclaimer to be followed by our trusty intellectual property rights notice. And now we're going to move into just a quick review slide from last week. And yeah, so this is going to be the way we go for the foreseeable future. And just in case you haven't tuned in a while, everyone probably remembers this is Wayne. Ryan, Greg, and my son are keeping an eye on the UOA feed for me, just so I can get this taken care of, because I've got a ton of stuff going on really for the foreseeable future on weekends or around weekends. So I've got my hands full. So I'm moving this to Friday permanently at this point. It'll probably be the exception when it doesn't get done on Friday, just for a while anyway. Maybe the next 18 months or so could actually be something like that, but we'll see how it goes. Anyway, this is the review. We did have that side note for last week. I'm updated that a little bit. We'll get to that. But the first thing I'd like to review is the percentages keep playing out. We are status quo, but OB. And that's how we came into this week. And I think in retrospect, we got the early in the week cool off that we talked about, that it would make sense. We thought they don't always cooperate with us, but we said, it would probably make sense if you're going to cool off or pull back. It makes sense to do it early in the week, given where you left things close out on the prior Friday. They then resumed the upward climb we've been in for a while. That really, I think, started in a bigger way on Wednesday morning, and then that just continued right into Wednesday afternoon, and things were looking really good. But then we had that swoon, basically the rug pull, but then they found support on the dailies, and then they obviously ramped things today. And you've got new all-time highs being made in several cases. So we did note last week, we thought we had a good sign that we picked up on. The leaders went back to leading after leaving narrow consolidations. So those were things like XLC, XLK, AMD broke out, NVIDIA was poised, SMH popped. All those seemed like signs of risk on. And I'd say in retrospect, it was interesting because they were, I guess, in some way, but they were also used to rotate out of, because they had been, I think, heavily owned, big winners, very widely held, and they'd done so well. And I think what they did, in my theory at least, is they cashed out of a lot of big time profits in there, and they rotated into other things. And I think we'll see that when we look at the 12 sector grid. We'll see that when we look at IWM and the diamonds. And I think we talked about the diamonds maybe starting to get their mojo too. So that's interesting. We also talked about what brought this back, and it's the same old story. The idea that likely or mainly we're going to see rates lower sooner. That hope is back again, and it's probably for the X time. I'd say probably the third time that I can recall in the last few years in a big way, based on what the market's doing. And we're in that sweet spot that we talked about. This is really, July is, for very, very many reasons, is a very good month. It happens to be a very good month in this fourth year of the presidential election cycle. It happens to be the start of the sweet spot where you get this year as well, where you get not only the July performance, but the next few months tend to be pretty solid as well. So right before the election, you're kind of hitting that. We talked about how we think the VIX is really a good buy, like IV is a good long-term buy, depending on where you want to place it. We also noted that it could get further smoked if we get the presidential election cycle performance, which we seem to be getting in July. July's in general, right, are good. And then you get the EPS season, and that's now the big wild card. We'll find out about, I guess, starting soon enough. But I think it's the same reminder really this week that on that yeah, you could get smoked more. And it wouldn't surprise me if there is a melt up in the market. We started talking about it this week in a bigger way in the webinars. But I also think that you might be getting a great value to buy the IV. So it's one of those things where, since you're positioning longer dated, that's really been the plan, right? I wouldn't worry if the VIX goes from 12, 12.2 something or whatever it is to 11 point this or 10 point whatever, because you're not really positioning in the near term, you're positioning in the long term. And it's just probably a time to buy, because the VIX itself has seasonality in its favor for the rest of the year. In other words, this is usually the lowish area that you get in the summer, and then you start moving up as you work your way towards possible volatile times in October, I guess, especially historically. So last week we noted the megas were getting it done. We noted, will they pull the rest of the market higher? Nvidia was poised as well. Will it help pull the market higher? And in a way, they did. Not by running themselves even further. They were actually, I think, cashed out of in a big way, because they had been such monster performers. And I think, again, as I said a little earlier, those huge gains were there to fund big rotations into many other places, which we'll see. And we did say last week the trend remained up, but we're ending the week STOB, and we were overbought in other ways as well, not just short term. We took away the Esterhaus warning, and I would just remind everybody that we've been sticking with well, if you're not sure, right, you should probably just keep going with the trend. And I think that really has been the trade. If you say, well, people will say, what's been the trade? Oh, it's been, it's been Nvidia or this or that. I think the trade has really just been to stick with this trend. I mean, this trend is, I guess, as usual, has confounded a lot of people. People are really there's some folks out there that just can't seem to come to terms with it, that I see on Twitter and so forth. But that's it. I mean, that has been it. Anytime you really wanted to fight against this thing, it's largely been a mistake. You could pick a few stocks here and there. You could catch a few swoons here or there, but you weren't getting anything that was really a big time payoff, and that's indicative of a strong trend. So this week, I changed the side note, and sometimes there's a second side note if you're wondering why it's side note one, but I would say roll your calls and avoid a complacency, because this is already overbought. We're maybe moving into higher levels of overboughtness soon. Maybe I'm thinking there could be really that you've got a situation where the percentages, the trend keep working. That's the title. You still, again, are short-term overbought. That seems like we find ourselves there a lot. And then there is a brief pause, and then they get going again. But this time it's set up for a melt up, because your readings are, except for really the Qs, the readings are pretty high in a lot of things like SPY and other things. And now, if you get that kind of super burst from the EPS responses, right, the EPS reactions, you could end up in a situation where this whole market is really overbought, very overbought, right, where you just don't go from short-term overbought, or even overbought across the board, but you're very overbought. And that's a different story than just overbought. When you get very overbought and very, very overbought, usually that's the end. You're very close to the end. And usually, right, you'll get a significant pullback at that point. When that could be, I don't know. I don't even know if there will be a melt up. I'm just saying, as I said in the webinars this week, the ingredients are there for one, because you're coming to next week and the following weeks with momentum behind you already. A lot of things have moved up, but interestingly, and they moved up strongly, which has brought short-term overbought conditions. But interestingly, a lot of bigger names have backed off. The Qs have backed off, and they've been obviously, a leader, the leader out of the big four overall. And so it's interesting that you could move up some of the biggest stocks out there, and they're not even. It would take for a little bit of doing for them to even become overbought. So there's definitely potential there that could really be that take your breath away phase that we have not seen, in my opinion, yet. Maybe some people feel like it's already happened. I don't. I just feel like we've seen such a steady grind, but with what we're seeing this week, I feel like it leads more towards that. So you could say, well, was it really that impressive? I don't know if it was, right? We had that really rough Thursday. Well, in the end, if it closes anywhere near where they are right now, it is impressive because the Qs, the spies also made new all-time highs, even though the Qs haven't fully recovered, but the diamonds have too. And IWM is still really far away. We've talked about that in the past. I've got it trading at probably between 265, 270 at this point as to where it should really be, were it to sort of catch up to the other indices. But it did have a monster week, which really is only the last two sessions. I mean, they've got this thing up. Wow, I don't even know, nearly, I don't know, 6 to 7% in two sessions. So it's really been a remarkable move higher for at the high, that is, for IWM. So we still are finishing overbought. The canaries we've been covering, right? We've had to cover the IWM and XTN for a while, but they all took a turn for the better. So again, last week's risk on signs to me seem to have been worthy of note, at least in this short run. The sectors improved, period. I mean, there's nothing else. I'll show the chart soon. Market breadth also took a turn for the better. So we can't really have those nagging little complaints about it. Well, this, well, that. Again, I've said it before. I think I said it last week. I wouldn't let those things keep you out of a trade because, as I said, I think last week, you don't always get perfect market behavior where everything's working, right? We probably can explain why we haven't seen any broadening out in the IWM and other sectors until now, and that's because the rate story was in jeopardy now for months. But now they've got that back on the front burner as if it's the big thing and it's going to happen. Once again, I'm still wondering if it's the case. It wouldn't shock me. It's just that I'm still wondering if they've got it right. We'll see about that. Anyway, I still think that with what happened and the rate perception, that pretty much started to wreck the dollar, wreck the TNX, the 10-year yield, and of course the VIX, which was trying to get it going yesterday with the market getting hit hard. That's also now on the ropes again. So it just doesn't look good. Let me make sure that we're getting the right share here. Yep, we should be still getting the right share there. So with that in mind, let's see where we are. Yeah, I did already talk about the VIX. I think it's sort of like the seasonality shapes up that long-term buying of vol outer months is good, but I still think the VIX could get further smoke for the melt. If we do have the melt up, it would obviously make sense. This is, again, we've talked about that cycle. We've talked about the Julys, and the fact that these guys are going to bathe in, right, really engineered EPS beats. That's almost a given, aside from the fact that I think the guidance has to be there. So if they get the guidance that allows them to, really make hay out of not only the results, but what these CEOs see going forward, I think they're going to do it. Just because this market has been pretty resilient for that reason and other reasons. And I don't think they're just going to let it fall apart. It would really be a surprise to me if the whole thing fell apart on solid guidance and supposedly good or quote unquote good EPS performance. If it fell apart on that, I'd be surprised. Other things, no. But if it fell apart on, no, guidance is pretty solid and the results were pretty good too, I'd be surprised. You could say, well, that's sell on news. Maybe it would be. Maybe that would be predictable in that way, but I just don't. Nothing else seems to really matter for now, and that's the way it often is. Stuff really doesn't matter until it does. I'm not going to go through the whole bogus data policies, other than say, right at this point, there was more stuff that came out about a couple of different things. You just got corruption. It's the bogus data has permeated everything. The corruption's permeated everything, unfortunately, in this country, if you ask me. I've had enough of it, but I had enough of it a long time ago. At this point, it becomes buy on corrupt manipulation, sell prior to escaping the aftermath. That's what happens these days and has happened for, I guess, a long time. If you didn't catch it, there was a note that came out somewhere that probably trillions of dollars, or at least hundreds of billions of dollars worth of ill-gotten gains by the gang, the usual suspects, that in the derivatives markets through manipulation, they're likely to pay some sort of $1 million fine, right? So it's the old, I'll gladly manipulate things now for billions, and while paying later, right, millions. It's the same old story, but it just keeps happening, and that's indicative really of a sick of a sick society. But what can we do about it? I'm not so sure. I'm not so sure we can do much about it. It just keeps rolling along. Um, the VIX remains oblivious. It seems like they just can't get it going. The inflation story isn't dead. There's still some leading inflation that came out again this week that showed that things were still not trending as well as they think. So that whole story on the next line down, big week for sectors, they showed the rotation that we were talking about already, the true belief in the rate cuts at this snapshot in time. They seem to really be buying into that and moving money to back that up. But that story, I'll remind everyone, we've doubted that story and the story's crumbled. So I'm not doubting the story as much as I have in the past, but at the same time, I'm not so on board with all of it the way they are. So I'm not so sure they're right. I'm just not as doubtful as I was the other time. So I guess that's really me getting pulled more towards them. But I would say be careful what they'll wish for, because remember, this is the key reminder: when you do get that first cut, so if that happens in September, the market's down, has a double-digit drawdown historically in the 12 months that follow. So just be ready for that. While everybody's celebrating, it might be somewhere near the top, a short-term top. Anyway, as I noted, the big three sectors I mentioned there, they definitely, in my opinion, saw profit taking, and that enabled massive flow into many other sectors. So at this point, the gang seems to have gone with the it's all good. Hey man, it's all good. That seems to be the view. We'll show that. The XLE, probably one of our more disappointing things lately, where we thought maybe this thing would finally start to go. There's still hope. It's just that it won't go. And that's the thing. It just won't go yet. And I would say that I still have a sense that the off-camera developments are likely to shock this market more than what the market is ignoring. And so all the things that I typically list that we talk about, the banking issues that are still there, what's happening in Japan, what's happening in China, what's happening in Europe, what's happening here in some of these banking system issues. They're still there. Other things are still there. Commercial real estate's still there. The bogus data is masking real serious economic problems in many places, especially here that I know of. But I would say, look, that's subject to change. I think that out of the blue kind of news, out of left field news that could rock this market, I'm really thinking of the short run, meaning the next few months, not something could always be sometime later, right? But I just mean I'm not looking at it like, okay, this is going to happen next week. I mean just over the course of the next few months. But I would change my tune and say, no, if I start to see, in other words, if I start to see data really starting to back up the fact that, no, this is the market's ignored this, but it's getting close to the point where I don't think you can ignore it anymore. That would be something where the jobs data is even more off than I know it to be, different things like that. Then they might have to start paying attention to it when it becomes clear that it was completely hallucinated. But I don't know if that'll happen. So, but that's when I mean, like, I would change my mind and say, no, the actual known data that's being ignored is now going to be a bigger problem than the risk that no one sees coming, which a lot of people call a black swan. But I would say the bottom line right now is that clearly the trend remains up. We're leaving this week. If we close out near here, we're leaving it kind of short term overbought. And I think the EPS fallout on balance is really going to determine our fate. So does the EPS, do the results combined with the guidance, does that allow for the melt up where that we haven't seen yet, in my opinion? Or will all this new positioning and this rotation, will that then get undone because they jumped in too fast, and really it was right in front of CEO comments and so forth and so on that were not that encouraging. I don't think that will be the case. My gut is that, just a gut though, is that it keeps supporting the market. Usually when you're in a strong trend, most things like that tend to support the market and support what they're doing, usually. But that's, again, there's not, you can't know for sure. It's not always the case. But I would say that my guess is it supports more of a melt up rather than a reversal. But that's complete gut, not based off of data, just to be very clear about that. And of course, I'm leaving many other items off the table because we're trying to cut down on time. On that note, stopping the share, and I'm going to reposition things, and we'll get into the charts. And actually, the first thing I'd like to do is really get us set up where we are looking at these sectors. So let me get the sectors pulled up over here. I'm not sure why they're giving me such a hard time. I kind of thought that they were, oh, there they are. All right, let me just pull these. Come on, guys. I'm having a hard time moving things with Thinkorswim's not allowing that. So here we go. So here's my first share of the charts, which should be screen 4 here. And I'll just try to cover them quickly this way, but and then we'll go into the individual aspects where it seems interesting. But I think you can see that here's the hesitation up here in this one on XLE, right? That's what I'm referring to. It looks like it should be able to go, tried to break out, failed, higher low, trying to work its way back up. It just can't really get the push that it needs to really get that snowball rolling. XLK, you could see the big sell-off yesterday. Again, I think they just took money off the table. Same thing down here in XLC. And you can see that so many other sectors, and I'm not going to belabor that, but I'll just go through and click on all of them so they become a little more visible for everyone. You can just see how the money just seemed to flow, right? The demand seemed to flow into these other places. I mean, look at the comeback there in XLY today. Look at XTN. There's the big transport move, right? So the XLF had a good week. I had a couple ideas, not as many as I wished for, but I think I had Morgan Stanley. I think we had Citi somehow. I mentioned GS somewhere, but couldn't get it in fast enough. I think Greg may have used it in the Rebel Pit, which was good. The materials came. I think we have 3M. I've got I think Target in here. I'm not even sure what anything did. XLI, but I was watching the sectors and I'm like, they're just buying everything else. And when I started to see things that I really wasn't initially impressed with on its own, but saw what was happening in the sector rotation, I started to broaden out the things that appealed to me to add as ideas. But you could just see how the last couple of days of hesitation in XLK and XLC really is at odds with virtually everything else. So that's really good in terms of, if you want the market to look healthier, behave more healthily, you've got it. It's definitely started to do that, and now it becomes, is it too far too fast? Can it be sustained? But there's definitely a sea change. You don't really see this type of strong movement, right? Really virtually everywhere but a few sectors. And so another thing we should look at while we're on that topic would be how that got doubled up. I'm not sure how that got doubled up, but notice, and I'm not going to belabor this because it's really not like, I'm not trying to make finer points here, but you could see that the new highs really started to pick up again and the new lows have not, right? They fell off. So that's not a bad look if you're a bull. Same thing, new high versus new low. Here you are with McClellan oscillator and McClellan summation. And McClellan summation, after kind of trolling along the bottom, it really has started to pick up with this sector rotation. and cumulative volume is up there making a new high. You've got all kinds of surging happening with respect to stocks that are above certain levels like the 50, the 100, and the 200. And you've also got advanced decline, cumulative, advanced decline, average, I mean, line itself, everything just working. So that's what I'm saying. If we're objective about it, and I think that's what we should try to be, that's what I try to be, all the time. And certainly in these videos for folks to try to, hopefully these can maybe help out a little bit, because it's not easy if you're new to all this stuff. And yeah, I mean, you got to call it like you see it. And Ryan and I were talking about it, and I just and we talk about the write up that I'm responsible for, but we leave in the Rebel Pit Pro, excuse me, that's the main write up. And I just keep noting in there, and I think I noted this last week in here, that there's still a lot of upside potential in this market. And we've had to note that because of my own experience. And I talked to Ryan about it and just said we're leaving that in there because we have to. I mean, we don't want people to get. It's too easy to get bared up, and I'm someone who would agree with a lot of the concerns that some bears raise. I don't really consider myself a bull or a bear, but I'm just saying that I agree with a lot of their sentiments and their viewpoints. It's just that I've seen this happen time and time again, that you have to just keep going with the trend, because usually you get this kind of really stretched price action before the gang will let things fall. And so to me, when I see right now, I've got this line here on SPY, and if I see this struggling up here, I'm not saying we can't have a short-term top and all that, but even if you, excuse me, you come back here and you say, well, let's look at some other resistance lines that I have drawn. These are minor ones here. These are a little bit more important, and that just suggests to me that stuff could go much, much higher. In fact, I think I've got, let me see where I can get this one from. It might be, let me see if it's right here. It's just, I have too many things, and I'll be the first one to admit that, but they're all important at a certain time for me. That's why I keep them. And I don't like loading different layouts. Just gets, kind of like tiresome to have to do that. So I'm trying to find a specific thing here for us to work with right now. And I don't think I'm not having any luck with it, as you can see. This is the one, I don't know how usually that's further down in my stack, but they moved it. Thinkorswim seems to have moved it here. But if I come back and just give us a little bit more perspective here, let's take like a 10-year daily, and I'll crunch it up for us. And you can see that, look at some of these longer term lines and where that goes to. And excuse me, Thinkorswim never fails to do the old percentage adjustment when I don't need it to. Thanks, guys. Schwab hasn't fixed that, that's for sure. But anyway, yeah, so there's a lot of potential here. I mean, I've been at this stuff long enough, and I've seen enough to know that if you say that this thing can't trade up to 650, let's say, I'm going to say no, I think it can. And it doesn't mean I'm predicting it. I'm just saying that I've seen these longer term resistance lines. You wonder how it could ever possibly make it there, and then eventually they get it there. And so I'm not saying it's going to happen anytime soon, not next week or the week after. I'm just saying that there's still a lot of potential on the charts, as long as they keep themselves away from key support where they won't, as long as they don't crack that. You could look into shorter term support if you want. If you want to be the first person out the door, maybe there's some people already shorting before we even hit some turbulence, real turbulence, but I don't think they're really in any serious trouble for a good bit. I think I said about 548, 549 the other day when we were in a webinar, and I'd sort of stick by that even with that line drawn right there. So that's your that's your big level at the moment for me, probably about 548. And as long as they don't fall below there, there's really no reason from in my mind to fight against them yet, because I just haven't seen anything where there's been compound negative divergences forming in different ways, and a lot of sectors are not participating. That was shaping up more that way a few weeks ago, but then we have had to concede that no, it's gotten a little bit better. It probably got a little bit better, and then now it's much better. So they don't have that ugliness. What could be the case though is just something out of the blue or out of left field that causes the problem. So there's always that risk. I can't I don't see that in the charts, so but that doesn't mean anything. It's still there. It's just not really baked into the charts as far as I can tell. Um, and I just feel like they've got this upside potential. So in even though a lot of this economic data is beyond beyond faked anything we've ever probably seen before, the market doesn't, in my experience, the market doesn't seem to care much about that until it has to, until it has no other choice. Though they'd rather run it all first and create that sort of FOMO, and I think bring people into the market, or get people to cry uncle that are fighting the market. And then when the last person's finally thrown in the towel as the short, and the last person that wanted to buy bought, then they'll start with rug pull proceedings, right? But until that buying is exhausted, they'll just keep trying to work things higher, and that's what they've done. And remember, there could be legitimate reasons for this too. Just because things are bogus now doesn't mean that they're going to be permanently bogus in the future. That could change. I don't want to say that I'm holding my breath for that. I'm just saying that you could actually get much better numbers coming up, and that could really power things. So, and they certainly don't need it to be perfect for them to keep buying. Let's put it that way too. So the Qs, the same thing. I'm just not going to do this for everything, but you can see that there's long-term trend lines that suggest that you haven't even gotten close to where you could, if this is really a bull market that's got some legs that has the last. And here's more of a longer term line. Now notice, right, that goes all the way down, or should say back to the the post financial crisis situation, and those lines really have us up in here, right? So you're looking at a significant leap. I mean, you're looking at another almost 30% higher for the Qs. Now, I'm not saying it gets there. I'm just saying I've seen that happen many times, and they'll usually get it close, if not make it to there, or if not exceed it. So it's a possibility. It would, if it stopped here, it would probably be right the exception where it really kind of fell way shy of where it should have made it to. But again, I think what could bring that about is really going to be more of a out of the blue thing than the stuff we already know that, again, we know it, but we're not wringing our hands over it. But again, I'd still do the old roll. But you could see what I mean, I hope, from those views. And so now let's dial it in more towards the short term. And like we've been saying, right, on a breakout, we'd be willing to go with things. And on a breakdown, right, as long as you're not above, as long as you're not below a key support level, then you're okay. That you could trade. And I think I drew this one the other day. I can't remember when I drew that one. I've got to modify that a little bit because I probably didn't have all this data, and it doesn't like that. But it's not going to let me modify it the way I want. Well, I'm getting some kind of weird double click thing happening with Thinkorswim where I click once and it's got me clicking twice, and that's just not really what's happening here. I'll do it one more time and see if it lets me. So there's that one. I'll extend this up. I'll try to bring this down for us. And that's the line that I would draw. That's the most aggressive line I could draw at the time. And you crack down below there. That led to your drop to the next support level, which is the rising 10. And then you're bouncing today. So now I don't want to draw these out, but I'll just trace them out sort of like with invisible ink. Right now you have to worry about if it gets back up here, right? Does it put a couple days together with a lower high? Does it put a couple days together and then work its way up and be a double top? Or does it just keep going above and have a false breakout, or is it a real breakout, right? So these are the scenarios you should be getting ready in your head if you're new, because those are all possible. And then when things start to play out, you keep your eye on them and you're not surprised by anything. So that way, right, you're really dialed into what can happen, what is happening. Right now, it's a pretty good bounce back today. We got to give them credit, and now we just have to see where it can goes. But like I said, I think where they're at right now, they've got a situation where it probably depends on these earnings, and if they want to make hay beyond here, they can, because thanks to yesterday, the daily RSI is only, and I say only, at 67 on the Qs, right? So we've been accustomed to seeing that thing at much higher levels. It was at quite a high level the other day, right? When before the selling started, it's nearly rounded off at 80. We've seen it over here at like 81.50, so 82 rounded. So you've seen it at slightly higher levels, but you've got 15 points in RSI before you get to a similar, overbought level. And so that's pretty significant, especially with some of these EPS reactions on tap in the very near future. The SPYs, let's do the same thing, but again, I would just stick with that 20 SMA on that Q, and I would probably just about say the same thing, because I think I drew this the other day when we were talking about it in one of our webinars. And this here, this line that I tried to make blue, which it's not letting me make blue, but this line I hope to make blue, that one is really right there, just along with that blue-ish 20-day. So not that you couldn't trade as a bear in front of that, or I'm just saying that I really wouldn't worry about a real breakdown in this market the way things are going, unless this thing is threatening to crack the 20, and probably some kind of a news event would precipitate that, because like I say, the natural order of things is for the news to basically support, or be made to support, or be tortured and deformed to support the trend. That's just the way it normally is. You do sometimes get stuff, but it gets explained away. Notice, right, how little people care about the revisions to the data, which have been incredibly one-sided, right? Rosy data gets revised down to pretty dismal data. No one cares. Keep buying. So there's still plenty of upside potential. The difference here, though, is that the SPYs are still getting overbought, right? They're short-term overbought. So if we add both of them together, if we take the Qs and SPYs, we average the RSI reading, it's about a 70 or 71. So they're getting there together, but the SPYs are a little bit more overdone, but it's not terribly overdone. And you can even see on these two recent peaks that we've seen it higher, right? We've seen it higher in the past back in here. So they could definitely do more damage with what they've got. I'm not panicking about anything until the 20-day gets wiped out. How bad can we say things are when we're making a new all-time high today, and we're just not even 1 point removed at this point from the all-time high? How bad can it really be, the way the market at least is pricing things? So that's that. I think this is getting, in bigger picture, getting concerning. So I don't think some of those really high numbers are going to be reached that I'm talking about, like 6,000. I mean, well, in this case, it would be 6 something hundred in SPY. I don't think that's going to happen, next week. I could be wrong, but I don't think it's going to happen next week. I don't think that's going to happen, very soon. But I'm just saying that the potential for it is still there. Given where you are, you may need to see some kind of a pullback or pause, hesitation, before just jetting right there. But then again, there's no rules that say it has to be that way. The diamonds, I think, are worth noting, because we were talking about them, that maybe, right, they were starting to do something. Maybe they were starting to look better, and they might be able to finally start joining the party. And I guess we got lucky on the timing of that discussion. It took a little while, but the last few days, just like with IWM, they've done it. So they've got those at a 72-ish on RSI, 73, I guess, rounded. So you're getting up there, right? You're pretty high for the diamonds. When you were near here before, you had a little corrective action. So you might have a nice little breakout, false breakout, pullback, and then see where it supports and goes. That would probably be a likely scenario there. But I wouldn't fight against it yet because, again, we're talking about something that's not even, one full point removed from the all-time high that it made today. So a lot of people like to buy new all-time highs. A lot of people like to get ready to fade them because there is some evidence that I've seen that suggests that if you wait for it to get extreme once it becomes overbought, there is a little bit of a quick fade trade. But I think it's a harder way to make your money. I mean, I think you might want to just be buying on the way to that. Just like with earnings, I think you're better buying on a pre-EPS run than you are showing up late in the game the day of or prior to the EPS release the following morning, paying exorbitant IV to get yourself involved in something. I think that's a tough road on its own. Probably the biggest story, though, in terms of visual movement this week really has to go to IWM. Little bit of a pet peeve of mine because we had some pretty big hits that happened to be on the put side, but the request that we get is to not have any bidirectional ideas in UOA essential. So we were not able to do that. That's not the way that we're handling it at this point or anymore, it would seem. But I had the sense that there were very few bears to include, wanted to include something just in case somehow things went off the rails. Had to really go with IWM. Was the biggest volume that I'd seen and of a well-known name and something that's often a good trader. But yeah, I think those that there's a player in there that likes to roll their puts up. I think when they're and move their puts around in a way that helps them to stay hedged when they're anticipating upside movement. So I've noticed that over the course of time, and their move, on early in the week, I guess it was Monday. Boy, they were just right in front of this. This is obviously just a remarkable couple of days there in IWM. So you've broken out in theory, very strong, right? You obviously to be up this much in just a few sessions, probably without question, right? Short-term overbought. When you're looking at something like a 2-hour chart and it's got an 82 RSI reading, something like that, you're definitely overbought. I wouldn't be surprised if there's a little bit of a pullback on that. But if these guys, and based off of what we see in the sectors, if these guys are really believing that, yeah, things are great, and this is really going to be this is really what we think we're about to hear from the Fed is going to set the table for the next leg of this bull market where everything starts to engage, so to speak, relative to just a few mega caps and semis and some communication stocks. Then they may think, well, that's wonderful news for the small caps. It all kind of makes sense, especially with yields getting smoked and so on and so forth. So I don't disagree with that. I just don't know if this is the best way to leave a consolidation, right? We talked about this before, that this has a ton of potential. So I don't want to sound like really I'm trying to pull this thing down. I'm just saying that this kind of an insane burst, while in a way it makes sense, at the same time, I don't know if it's the ideal way to leave a consolidation and start to march higher. But impulse moves like this, something that's really impulsive and they just can't get enough of it. Right. This looks great from a long-term perspective. So let's go out to a weekly chart, and that looks phenomenal, right? So once again, you probably have some hairy short-term trading, but remember, ultimately, there's a ton of potential here. So, if this market continues to perform, that's maybe a really good catch-up area. I think our catch-up ideas over the course of time when we shared them have been pretty good, to be honest. So catch-up trades, are sort of not my favorite, but they're also not my least favorite. They're actually pretty solid if you can find the right setups with the right UOA, blah, 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 things like that. There's other factors, of course, but excuse me, just a very, I like that style to a degree. I don't want to wait around and only trade that, though, is probably a better way to put it. So this all looks really good. This was really dogging it for quite a while, as I'm sure almost everyone who's watching the video knows. And now it's getting back on, getting back on track, or it's seemingly getting back on track. It, again, short term, I'm concerned, but if it behaves well, excuse me, after this pop, if there's a nice little mild pullback and the market starts to go again and it starts to join it and starts threatening to take out highs, I wouldn't worry about the gap after next week. If it acts pretty well, it stays away from the gap, and the market's looking good at the end of next week, and this is too, I wouldn't worry about the gap. The gap really doesn't affect me after we trade for another 3 or 4 sessions. I'm not going to worry about that gap. And much like right here, after a while, there's a gap that's unfilled here. We could find others, but they still have an unfilled gap, and look how far away that is, right? So after a while, you can't let that really hypnotize you. So what I want to do is also talk about some things. Lumber has been telling a rough story, but that's not really spilling over this week. In fact, it seems like it's the opposite. They're probably thinking good things here. So this is an interesting change here in the lumber, timber ETFs, housing. Probably makes sense if you think about it, because, right, this has been pretty rough stuff. And now you've got this sort of little pop developing in wood and cut. And that's interesting in that you maybe, right, with lower rates, they might think, again, understandably so, that this puts the housing market back on better footing. Suddenly the housing market, right back up again. It's it's something that just refuses to die in terms of the equity markets, at least. So, and again, this would be something that, for me, knowing how expensive things are relative to incomes, to me, this is not really great, but it's good for certain things. It's good for the economy overall. You're very little removed now from the highest highs. That, just like that, something that had been struggling really for months is now right back in business. So you have to ask yourself, is that really sustainable? Right? Is this kind of a move really how you want to put this, start putting things on better footing? But you could see, here's your IYR, right? So they've got that back up. So these lower rates have really created the lower rate, whatever you want to call it, this belief that's been resurgent this week, has really resulted in some dramatic moves. So not only is energy demand there in XLU, but due to the usual suspects that you're all thinking about, but now with lower rates, that's also good for XLU as well, right? So that's worth pointing out. So that had a nice correction, nice pullback, and now they've got that going again. So there could be some trades in there. We did go into a bounce trade in that one, an ENPH. Don't know how it did. I had to add some levels. I don't know how it's done since then. Let's get on there was a, wow, I guess it even moved up more than I thought. So there's an example of a trade that I try to be very selective about these sort of bounce ideas that I put into the services. ENPH was one of them. And we caught the bounce there clearly, and I'm happy about that, because I really do hope people do really well with all the work we put in on the services. And as a lot of you know, I pretty much spend all my time supporting UOA Pro because a lot of people find that to be a good fit for them that like to be pretty active. But there was a good bounce kind of, but yeah, N phase had a nice little move. Now, another kind of one that we got questions about this, and PLSE. This is another one, and this is interesting too, that this one's making a new high, because I think a gentleman or a lady, I'm not even sure, really, I can't recall, had asked me about why I put these in. They were not really getting good ratings from certain websites, and I just tried to explain that I don't pay a lot of attention to those things. It's not that I would necessarily disagree or I don't respect an opinion on certain things by quantitative things or other commentators. It's just more to do with the ingredients. I'm really just looking at ingredients and just past histories and behaviors that the market exhibits consistently over the course of time. And so I know that even, things like this have their time, and you try to mix that into your log, and hopefully it works sometimes. They're not all of them naturally do, and not all of them even trigger, but some of these things are really interesting at times. I think we had this one too that I added, because remember what XLI is doing, right? So I've got 3M leading. I've got a catalyst in the earnings. They might be getting excited about that. Excuse me. You can see that XLI, after consolidating for months, thanks to this real sea change in the market this week, that's starting to go. So I look at it just as I say to all of you each week or weekend. I try to look at this really as, what type of a market am I operating in? That's really my first question. And how does this opportunity fit into this market? And it's not easy to do. I'm not even never making that claim, but when I see the sectors broadening out and I see money theoretically flowing into all these different areas, and one of them is XLI, and then I see things like, I see the paper in 3M, we had the call buying, and I also see the earnings that they could maybe want to try to run and gun into. It's a good combination, right? It's not like and the charts, of course, are reading the charts told me that this thing had the potential to start doing something. So just like it was the same with some of the financials that I put in, right? If I look at MS, we put MS in, and MS is certainly not my favorite financial to trade, but it was coming out of this corrective action, starting to lift up again above all the SMAs. All of them are still intact. They're all still rising. They're all stacked. Has the earnings catalyst, has the UOA, has the charts in its favor, and has the sector behaving better, like we talked about last week. So again, this is nothing brilliant. I'm not claiming it is. I'm just trying to line up as many factors as I can in terms of stacking those factors in our favor, and especially the charts for me anyway, and to say, look, this has probably got a pretty good chance. You just never know, but you really want, the more support you can get for an idea, the better off you are, is the way I look at it, and always really have. Because even if you're wrong, you can live with it, right? If you fail, like, well, no, it had a lot of really good qualities, and I got involved and it just didn't work, and I managed my risk, and that's just part of trading, right? It's just a big part of trading. So I just felt like it was worth sharing a few of those. But all these sectors, really have swung around. And naturally, we didn't talk about it last week, but the XAU is, excuse me, is back, baby, because the dollar's getting clobbered, rates are coming down, and there you go, right? This is what you expect to see, and you're getting it. So that's back in business again. So that's also been at times a good trader. And remember, I'm not trying to predict things here. I don't really try to do this long range. I'm trying to provide these videos, like, really just so folks can put things into context and maybe help themselves out in the next week or two, or some point in the future, where something that maybe they picked up from me and my experience of doing this for so long helps them out. It's not about me trying to be right in this grandiose prediction or this or that. I'm just throwing out things that occur natural to me that I think could be helpful and hopefully will be helpful. But this has really been what you'd expect, right, when we see this. So I think this is a little bit of a sidetrack that I'm on, but I think this really argues for what we do. I think a week like this really shows you how so many parts of the market are interconnected, right? That you're in this ecosystem. And if you stick with us on these weekend videos and start doing your own work, which I know some people have, which is kudos to them for doing that, because doing your own work and getting other folks' opinion, I wish I had the time to get more opinions, and not necessarily here's what I think, but here's what I'm seeing more so, right? Not what I think. It's more about what are you seeing in the charts, and why do you see that? That would be great. I just don't have the time, and I don't even know who I would look to be honest. I used to follow some folks, but I don't follow that many people that closely anymore, just really due to the interest of time. But it would be good if you're newer to all this and you delve into it and say, well, I don't know if I see it how Wayne sees it, but I'm just saying that's fine. It's just really the whole, what I'm trying to convey is I really hope that in these combo videos that we've done of late, especially, that you see how these things are so connected to each other, and that looking at things just one off without looking at the sectors, without looking at what the dollar and rates are doing, or yields, I should say, all these things, you're really missing part of the story. And in my opinion, and that part of the story could be quite important, right? So if you look at this stuff comprehensively, excuse me, I really do think that it's a great benefit. And that's the reason why I'm going on this little soapbox detour. But it's true. I mean, I wouldn't spend the time and the breath to tell people that if I didn't really believe it. But interestingly, let's look at a couple more things. We've looked at quite a few, but I want to wrap it up soon. But discretionary. This was had a rough day too. But look, they brought this right back. They brought it right back, and you're barely off the all-time high. You're only about a point off of it from yesterday. So they're right back at it right after, and that's the thing that's selling. And then that's selling. It would be better if it lasted a little longer if you're a bull, and it would drag on for a few more sessions. But they're not letting it. And usually, and I don't want to get too far out on a limb here, but usually if they won't let that happen, that's usually a good sign, when you're in front of a very a catalyst period like this one. Not always a good sign, but I think when you're in front of an EPS, I think they're coming into this really expecting a lot. So they could really rejoice if they get what they want, and if they don't get what they want, there could be some ugly things. But here's your staples, and they're really starting to shape up as well, right? Sort of, they're not a big mover. I wouldn't be too excited about them, but they're in good shape all over again. And I think the transports are the big story to kind of finish out with. I don't want to belabor how the VIX could be back at a 5-year low. We've talked about that enough lately. I think everyone that watches these videos knows that. And you could just see here with XTN, let's just do it objectively, right? Higher low, right? Better RSI reading, really strong impulsive move higher for a few sessions, hitting the 100, hesitating, 150 there, but then there's nothing. There's nothing after that. So if they really do think that they're going to get these rates, going to get the economy, I think they're ahead of the game a little bit again. But if that's the belief, and it's pretty widespread, and now you could be seeing FOMO, the closer we get towards the end of this year, the closer you get towards the FOMO, if you have not been aggressive as a buyer to this point. We don't want to we don't want to get too far ahead of ourselves, but they can't really get aggressive really in OCK or NOVE until they're past the election. So if they're going to start feeling like, well, I better start catching up, they probably need to start doing some of that catch up now, because there's probably a little bit of a pause phase, maybe right in October. And typically the end of August into the middle of September is pretty lackluster in terms of trading. Not always, but just in general. So they don't have a lot of time. They've got about 6 weeks, and then they've got maybe another 2 to 3 weeks, and then they might go into that election sort of paralysis, pre-election paralysis. But that assumes that the election is going to be held as it typically would be, and that we won't have any events that that occur between now and then. And I'm not so sure about that. I'm just being honest. I just don't. I have a very cynical view of things, and so I can't say I was shocked by the what happened leading up to the last election. That didn't surprise me from all the reading I was doing, and it wouldn't surprise me if something really happened between now and then, event wise. Now, I don't want to go into details. I don't know anything about from anyone. I'm just giving the gut take on it, just from my just sense from reading different things um, over the course of time. But anyway, and those include books and things like that. But this is this is very encouraging if it can get up and go, right? If this starts firing and they start getting XLE firing, really there's not much left to hang your hat on in terms of being, oh, I'm not so sanguine about this because of this. There really won't be very much left, especially if rates keep rolling over. Look at this here, right? Higher low, bounce off the 200 in XLE, and here you go with a better reading on RSI. So, right, it's all kind of acting exactly the way the textbook would want it to. And all it really needs to do still is clear the 50-100, and it's got a chance to go. And if the things really are improving and we're on the verge of a so-called loosening cycle around the world, that could really start to bring about an uptick in commercial activity, not just domestically, but globally on balance. And lo and behold, right, maybe the energy demand picks up from there. So it's all set up there to be pretty good. We're on the cusp of EPS season, and there's a lot of complacency. But again, I think if they get what they want out of results, and especially guidance going forward, I think they're more apt to still celebrate further because they're short-term overbought, but they're not super overbought, big picture overbought yet. They will be if they have a great finish to July. I think it'll get close to that at the very least. But for now, it's just basically garden variety overbought in the short term, a little bit overbought, bigger picture, but not excessive. And so there's room to go before you get excessive. And that's why I still believe we haven't seen that take your breath away phase that I talk about. So on that note, I'm going to wish everyone a great weekend. If you watch this while there's still some time left on it, a great week ahead. Stay nimble out there, and I hope you got something out of the time we spent covering these charts and these topics. Thanks for tuning in, and everyone stay frosty out there. It's very hot around the country.